expert news and views on the Lowcountry real estate scene. The Brian Beatty Real Estate Show on 1250 WTMA.
Welcome back, folks, to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. I'm, of course, your host, Brian Beatty. Thanks again for joining us. We're talking about what we think is going to happen in the real estate market next year. And it's a bit of a slippery slope, if I'm being honest. It's with all of the changes that we've experienced and with the volatility that we've grown used to, it might almost be categorized to some as foolish to talk about what might happen next year because there are so many variables at play here. But we're going to do the best we can. We're going to try and help you understand, from my perspective as somebody that's been doing this for 17 years, that follows the market extremely closely. And I think have a pretty good grasp on what's happening here locally based on, the fact that I've sold over 1,200 homes and about $1 billion worth of real estate. I want you guys to have some level of confidence with what's going to happen next year, which might influence your plans if you're thinking of buying, selling, or investing in real estate. And, from your perspective, you want to absorb as much information as you can from different sources, right? I'm not the end-all be-all for what's happening in Charleston real estate or the real estate market in general. So it's good to diversify, but just be careful with the, source of information. And I'll just, before we get into some more particulars about what's going on in the market and how we need to absorb this information to shape our understanding of the market, I do first just want to say that I think next year is going to be kind of, boring real estate market, lukewarm in comparison to what we've been used to. But I think it makes sense for us to categorize the COVID real estate market as an anomaly, right? We haven't seen anything like that before in our documented history, literally. So for us to compare what's going to happen next year to, say, the beginning of this year is worth having the discussion, but it's, what happened over the past 2 years was so far outside of reality long term that, and I get it. We all have kind of short-term memories. We all want to say, well, this time last year, I could have bought that home and it would have been, 60% less per month than what I'm paying now. Well, I get that, and that's a valid point. But I think that we need to just kiss that market and that scenario goodbye. I just don't see that happening again anytime soon. So moving forward, we need to have an understanding of what we think is going to go on in the real estate market. And what I want to say is all real estate is local. What we were talking about last segment was more of a national perspective on what's going to happen in the real estate market. And throughout that, I was mentioning that if you have some questions about your specific market, your area, your price range, what you intend to accomplish next year as it relates to real estate, then let's have a conversation. Let's start that preparation. My number is 843-800-0065, 843-800-0065. That's my personal cell, so you can call or text that. Or if you'd like, you can contact us through our website, listingsincharleston.com. That's listingsincharleston.com, or you can send me an email, brian@brianbeattyteam.com. But first of all, there are over 400 metropolitan statistical areas, right? Big markets. There are over 3,100 counties. There are over 9,000 cities in America. So there's no such thing as a national real estate market, honestly. I think what we need to do is categorize different locations and the markets that they typically experience, whether it be a linear market, cyclical market, or a hybrid market. And this is kind of the first time I've mentioned this on this program, but let me kind of break that down for you. Let me unpackage that a little bit for you. So linear market is more of the, I'd say boring, but more just like the flyover states, right? They're not usually the markets or the states that are making headlines. They are typically characterized by low land value, high improvement value. Because when you buy real estate, you're buying two things. You're buying the land and the improvements that are on that land. So in a linear market, when things are going really well, land value jumps way up. But when the market softens, so does the land value. But the value of the improvements on the land doesn't really drop that much. I mean, it was common after the housing crash to see deals go through that were below the cost of construction. And I don't think we're going to be even close to that kind of market moving forward. But if you think about it, the materials used in homes are traded globally. They are not attached to any one currency, and everybody needs it because we as human beings need three basic things, right? Food, clothing, and shelter. So the cost of the materials sets a bit of a baseline or a floor, if you will, for values, which is why real estate doesn't go to zero. So in these linear markets, the ones that aren't really making, headlines, when the market goes up, the value of the land goes up. When the market goes down, the value of the land goes down, but the value of the improvements don't change as much. Think about I don't know if you guys see these types of things or not, but obviously all of my social media is full of real estate related stuff. And so you'll see these videos of, look at what $500,000 gets you in, fill in the blank, Texas. And it's like a 5,000 square foot, beautiful, brand new home. Well, that's a linear market. The land costs next to nothing. All of the value is in the improvements that are on that land. So as an investor, it might make sense for you to invest in linear markets where the land value is low and improvement value is high as a ratio to kind of help offset your risk. But a cyclical market is the exact opposite. They're usually the markets that are on the coast, right? Los Angeles, perfect example. The land value is through the roof and the improvements in comparison to the land value is relatively low. That's why a 2-bedroom, 1-bathroom shoebox costs $1 million in Los Angeles. And I'd say the same could be said to an extent about Charleston, although I would characterize us as kind of somewhere between a linear and a cyclical market, which would be a hybrid market. And that's because of the diversity in real estate types and the associated values that we have here in Charleston. I mean, we have, within a 45-minute drive of downtown Charleston, we have all different types of properties. We have downtown historic properties. We have beachfront properties. We have waterfront properties. We've got equestrian properties. We have, fill in the blank, we've got it. So if you compare a linear market to a cyclical markets just get hit a little harder than linear markets. And part of that is due to the affordability associated with those markets. As an example, like if I compare the cash flow analysis that I would do for the investors that we work with, because we also own a property management company to provide turnkey service to our investor clients or to folks that just, hey, we're moving out of the area, but we don't want to sell our home. We want to have it professionally managed. My property manager he's got over 25 years of experience. He's an incredible guy. And our property management company was built by investors, for investors, me and others, to maximize cash flow and to maintain the asset so that we maintain value. But anyways, if we're looking at a cash flow analysis from 1 year ago versus 6 months ago versus 1 month ago, they look significantly different. Cap rates or cash on cash return are being compressed across the country because of the cost of debt, right? And we need to remember that real estate, by and large, is a credit-based asset class. So when the cost of debt goes up, deals just look less attractive. But, the question is in comparison to what? We're talking about real estate investing or investing in general, and there's always the opportunity cost associated with investing in one vehicle or asset class versus everything else. I mean, we all know how volatile the stock market is right now and has been, and there are a lot of people that have some, extra money in their pocket trying to figure out what to do with it. So for the folks that are cash heavy, it's just a chase for yield. But it also depends on their propensity for risk. Like as an example, is right now a really good market to start flipping properties? Unless you have a lot of experience in flipping homes and you have your processes and your people down packed, then the answer is going to be no for an overwhelming majority of people. There's too much risk, and we're not entirely sure whether prices are going to go down, and if so, by how much. And that's just the reality. So unless you're going after home run deals, which are few and far between, and everybody else wants them, then flipping might not be the answer. But what about buying a cash flowing property? If we're comparing what we can get right now to what we could have gotten a year ago, it's an exercise in futility. It doesn't matter because we have to deal with the here and now. And we have to compare what return on our investment looks like now in real estate versus everything else. And I'm here to tell you that in most instances, real estate investing is going to make sense for cash flowing property for a lot of people, especially if you have cash. The challenge is, of course, that affordability is so darn high that it just makes just about everything look unattractive, especially if you're comparing it to the deals that were being done at the beginning of the year or even last year. So when we talk about the fact that real estate is local and the fact that we have so many different types of real estate classes, right? Everything from beachfront to equestrian and everything in between, it's appropriate to say that we have linear and cyclical and hybrid markets just within, a 45-minute drive of downtown Charleston. Those markets are going to behave differently from one another for different reasons. But it also makes sense to understand what's happening at a regional and national level because we're a destination market. People are moving here from other areas of the country and world. So it makes sense to understand what's going to happen to them when they go to sell their house and then how that plays into their ability to purchase whatever it is they want to buy here locally. The good news is there's a lot of equity in this nation, in this region, in this little corner of the world in Charleston, South Carolina. We have a lot of it in most instances, except for those that maybe bought over the course of the past few months, which isn't a ton because we've seen sales go down, closings go down for 9 months in a row now when we compare it to the same month last year. And we're going to expect that to continue for a few more months. But when we look at, let's say, a second home market, and we look at the cost associated with purchasing one of those properties, unless they have cash, it's not going to look all that attractive to a buyer, which means that market's going to soften quicker than one of the necessity-based markets or entry-level markets because those markets just move quicker. There are more people that can afford homes within it. There are more transactions within it, and they're a little more stable. It's a need versus want mentality, which means that this year coming up, I think there are going to be some interesting purchasing opportunities for buyers. Again, you're already starting to see sellers take advantage of this little shift in the market that we've experienced over the past few months, get ahead of it, and get out before things get potentially worse. And that's, I got licensed in 2006. And so I've seen a full market cycle. And I can tell you the people that were proactive and the people that researched markets, the people that were informed consumers were the people that fared better than those that just kind of buried their head in their sand, hoped that things got better. It didn't. And they ended up losing money as a result. Now, I'm not saying that everyone listening to this program or everyone in the country should sell their house and buy another right now, because at the end of the day, everybody has 2 to 3% interest rates. I mean, what is the real incentive to move right now into a 7% interest rate home if you've got 2 to 3% as a fixed mortgage for the next few decades? That's the problem. That's the challenge. And that's the tipping point. If more people put their home on the market, then we'll see prices soften. If they stay right around where they are, then prices will soften. They'll soften a little bit, but we're not going to see that, double-digit decrease likely in prices that some people are promising. And a lot of that's because, look, people want ratings. They want reviews. They want views. They want comments. They want to get paid by YouTube or whatever. And in order for that to happen, they have to put content out there that's so polarizing and so catchy and so buzzy that people just have to watch it to see what's going on. But I think the person that's educated in this market that has sold real estate in it before understands that we're just returning to some normalcy. If we're comparing it to what's happened over the past 2 years, then we're going to make ourselves go crazy. Okay, we were all driving 100 miles an hour. Now we're just going to be doing the speed limit. And that's not such a bad thing. Okay, so when we come back, we're going to continue this conversation right here on the Big Talker, 1250 WTMA and WTMA.com. But if you want to reach out to me, you want to have a conversation about what you're thinking of accomplishing next year, you want to talk about buying your home, selling your home, we've got multiple different commission rate structures. We have incentives for just about any scenario out there. We want you guys to win in your transaction. We want you to earn money in your transaction rather than save it. We want to do everything we can to improve the quality of your transaction and put a little extra money in your pocket in the process. We do that through experience and through the incentives that we offer. So if you'd like to learn more about that, 843-800-0065, 843-800-0065, or go to our website, listingsincharleston.com. That's listingsincharleston.com. Stick around, folks, for more of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com.
More stimulating talk on real estate matters with Brian Beatty next on 1250 WTMA.